Coming up on Market to Market, major economic players go back to the bargaining table after nearly a quarter century. And young veterinarians fill the gaps in remote parts of the country. Those stories and market analysis with John Roach next.
And so we look back in a little bit of history for that.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The thrill of a new car, the drudgery of new windows, and the excitement of a new computer all likely were felt by U.S. consumers as they hit the bricks or made some clicks last month. In July, retail sales numbers advanced 0.6%, the largest jump since December. Amazon Prime Day had a hand in the lift, while purchases at big box hardware stores helped. And the top may be in for Wall Street as lower earnings, North Korea, and Steve Bannon's departure deflated the Dow Jones Industrial Average. Trade deals are touted as either profit makers or job takers. Negotiations can last several years. Some have resulted in deadlock, like Doha, or a major player leaving the table, like the U.S. did with the Trans-Pacific Partnership. The U.S. currently is a partner in more than 70 trade pacts. However, the current administration is looking closely at several. The South Korean Chorus Agreement is under scrutiny despite a recent lifting of a ban on U.S. poultry. And this week, the door was thrown open on the NAFTA Accord, which was officially adopted in 1994. Paul Yeager has the details.
The three countries of the North American Free Trade Agreement sat down this week to begin in earnest the reworking of the decades-old accord. Candidate and President Donald Trump have scorned NAFTA over trade deficits and sending jobs out of the country.
NAFTA has been a horrible deal for the United States. It's been very good for Canada, it's been very good for Mexico, but it's been horrible for the United States.
The president's trade representative held firm on the strong position this week, firing an opening salvo.
For countless Americans, this agreement has failed. We cannot ignore the huge trade deficits, the lost manufacturing jobs, the businesses that have closed or moved because of incentives. The U.S. government has certified that at least 700,000 Americans have lost their jobs due to changing trade flows resulting from NAFTA.
The Trump administration also is targeting the weekly enforced labor, environmental, and manufacturing rules that for 23 years have drawn American assembly plants to Mexico. The average 2016 wage in Mexico was $2.10. Many of the workers on the assembly lines don't make enough to purchase the vehicles they produce. The U.S. Trade Representative's office said since NAFTA was implemented in 1994, the U.S. bilateral goods trade balance with Mexico has gone from a $1.3 billion surplus to a $64 billion deficit in 2016.
Mexico comes to this negotiation to play a constructive and proactive role, with a commitment to advance our interests and goals without risking what we have achieved as a region.
For the U.S. government, NAFTA goes beyond goods and services. The U.S. seeks balance. Mexico wants immigration issues addressed while leaving trade policy alone. Both countries know the clock is ticking as major elections loom in 2018.
Hi, everybody.
Canada's counterpart says her country approaches trade as free and fair and not a zero-sum game.
Canada doesn't view trade surpluses or deficits as a primary measure of whether a trading relationship works. Nonetheless, it's probably worth pointing out today that our trade with the U.S. is balanced and mutually beneficial.
The U.S. has a $11 billion trade deficit with Canada, despite the two countries exchanging $635.1 billion of products in 2016.
We are the biggest client of the United States. Canada buys more from the U.S. than China, the U.K., and Japan combined. Trade is about people. It's about creating the best possible conditions for jobs, for growth, and for prosperity.
While Trump touts America first, farmers and ranchers have benefited from NAFTA. 1 out of 10 planted U.S. acres end up feeding people in Canada and Mexico. The two countries are the top destinations for domestic corn, soybeans, pork, beef, dairy, and poultry. Former Secretary of Agriculture Tom Vilsack says the trade deal is more than just manufacturing, but agricultural goods, including products originating in the parlor. Vilsack, now the head of the U.S. Dairy Export Council, says fixing trade isn't as easy as the president makes it sound.
A very complicated negotiation within dairy, and then you have to put dairy within agriculture. And the fact that the corn and soybean folks are anxious to maintain what we have benefited from NAFTA. The tomato growers in Florida have a different view of NAFTA and have a different view of Mexico than we do in dairy.
Vilsack adds, as the U.S. pulled out of the Trans-Pacific Partnership, it missed an opportunity to gain leverage in future unilateral deals. And if the U.S. would walk away from NAFTA?
The challenge here would be for the president to get frustrated with the fact that there is not action and go back to where he was at the beginning of the administration, where he was suggesting that perhaps we should pull out of NAFTA. Now that would be a serious mistake.
For Market to Market, I'm Paul Yeager.
If you raise animals, you likely have a close relationship with your veterinarian. Just knowing you can make a call in the middle of the night for a little help with a calf that's breech is enough to instill confidence in building your operation. When an animal doc calls it a day in a remote area, you might think it would be a struggle to find a replacement, but that's not always the case. Peter Tubbs has our cover story.
A horse with a foot problem is the first patient on Monday morning at the Droege Animal Health Center in Eureka, Kansas. Greenwood County is defined by the Flint Hills, which limits agriculture to ranching rather than row crops. Horses are the preferred tool for herding cattle here, making equine medicine an important part of a vet practice. This is the only large animal vet clinic in the county, and both veterinarians on duty tend to the patient.
It's hard to do that one-handed, isn't it?
Dr. Kaylee Fitzmaurice is solving a problem in American agriculture, a scarcity of veterinarians willing to work with the millions of food animals in rural areas. The USDA's Veterinary Loan Repayment Program is an encouragement to fill the gap. Fitzmaurice sees a reduction in the principal of her vet school loan for each year she works in an underserved region of the United States.
I'm going to give an antibiotic called Nuflor to take care of the infection of the skin.
Fitzmaurice joined Dr. Dwayne Droege to care for some of the 300,000 food animals in a 9-county region of southeast Kansas. Droege is nearing retirement, and Dr. Fitzmaurice is in the process of buying the practice. The loan repayment program is allowing that to happen ahead of schedule.
Without the program, it wouldn't even be feasible for me to think about buying a practice, and I'm only 2 years out, and we'll have the practice bought by next year. So it's just totally changed the financial aspect of moving to a rural community where before it wouldn't have been feasible for probably 10, 15 years, and 5 years out, we'll be right on track. So it's been awesome.
The Vet Loan Repayment Program defines the regions with the highest need for veterinary services and strives to place veterinarians into these regions. Vets willing to take care of food animals are the highest priority, followed by those willing to work in rural areas at least 30% of their time.
That's what I was hoping to find.
An average annual investment of $5 million USDA dollars has had mixed results, but progress in the most critically underserved areas have been a bright spot in the program. Since the first year of loan repayments in 2010, the number of areas where large animal veterinarians are desperately needed has been cut in half, from 40 to 20.
A lot of people probably don't see the draw of southeast Kansas, but I grew up here, my family's here. There's thousands and thousands of head of cattle here. Ranchers are here. It's been the perfect place for me, and I mean, I'm glad, I guess, there was a shortage of veterinarians here. It worked out really well.
Maintaining the veterinarian supply may be as important to the country's food chain as the animals themselves. The USDA estimates that American meat consumption will continue to grow over the next 20 years, which will require an increase in food animals to satisfy America's taste for protein, and an increase in veterinarians to maintain the health of the herd. A 7-hour drive to the west, Dr. Barbara Peterson is checking on a herd of Jersey dairy cattle near Dalhart, Texas.
Pero especialmente después de impacción, después tiene chorro, ¿no?
Peterson, who grew up on an Iowa dairy farm, found an opportunity to start her own practice with a focus on food animals, specializing in dairy. While this corner of Northwest Texas has over 1 million beef cattle, it is also home to almost 50,000 dairy animals whose milk supplies a local cheese plant. The medical care runs the spectrum, from lab work to embryo transfer using artificial insemination.
There's so many animals here, so many chances to see different things, to see cases that you wouldn't normally see if you're in a smaller practice area. So, yeah, it is rural, but it's really nice.
The dairies Peterson serves each have over 10,000 head, and milking is an 18-hour process each day. Because of the large numbers, one of Peterson's goals is on training dairy employees to triage and treat cows, holding the line until a veterinarian can arrive.
They're actually my go-to people. The employees, day to day, they know what's going on. And it's nice to get to work with that level of person, of skill.
The veterinary loan repayment program changed Peterson's finances enough to allow her to hire another veterinarian as her first employee, Dr. Aaliyah Hoffman.
She really, really has done a great job of growing into this role of, one, helping with existing clients, and two, growing relationships and new opportunities.
Peterson takes advantage of the requirement for veterinary school externships in the operation of her practice. Brian Stamfel of the University of Minnesota is one of a long line of students to pass through Dalhart.
You don't have blood? Does it push easy? Does it push easily?
Oh, yeah.
Oh, yeah, you're good.
Oh, okay.
Good. Yeah.
Externships are valuable to vet students, both to learn the type of work a student prefers and the region of the country where they are most comfortable.
Having veterinary students is a lot of fun because they're about to graduate, they're ready to get in the field. We really enjoy teaching them, and we learn from them too. They're always showing us different things.
Time spent working in a community can help overcome preconceptions of an area, even if they appear to be a tough sell to an outsider. In the end, however, the work is the biggest draw to a job, regardless of location, incentives, or pay.
3 days old. Animal husbandry is definitely the most important part of our job, and I think more so even sometimes than our veterinary degree, because whether you have 10 animals or you have 10,000, each one of those girls needs to be looked after and cared for.
For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The commodity markets had a battle for the basement as good weather and last week's report continued to be a siren call for LaSalle Street bears. For the week, the September wheat contract lost 23 cents and the nearby corn contract moved 9 cents lower. The September soybean contract found a floor at the beginning of the week and then swung higher to strike near parity with last Friday's finish. December meal dropped $3.70 per ton. In the softs, December cotton shrank 97 cents per hundredweight. Over in the dairy parlor, September Class 3 milk futures rose 2 cents. Livestock joined the price floor party as the October cattle contract slumped $1.50 and nearby feeders went $2.20 lower. The October lean hog contract fell $2.50. In the currency markets, the U.S. dollar index added 40 basis points. Crude oil shed 31 cents per barrel. COMEX gold lost $2.40 per ounce. And the Goldman Sachs Commodity Index continued its decline, dropping nearly 1.5 points to finish the week at 381.20. Here now to lend us his insight on these and other trends is our senior market analyst, John Roach. John, welcome back.
Thanks, Mike. Great to be here.
We're glad to have you. And in case you want to go over things again, you can listen to our market analysis and Market Plus podcasts anytime online at iptv.org/MTOM. Now, John, I was looking at the wheat market. Chicago wheat closed the week at $4.16 on the nearby contract. I think that's where we closed, or right around there, back before this big rally happened. We've given it all back.
We've given it all back. That's exactly right.
And we're still in a downward trend, aren't we, in the wheat market?
Oh, certainly are. Mm-hmm.
Where do you see us going? Are we going to be testing $4 in Chicago?
Hard telling. I mean, we've been in a extended decline here. Remember what happened was that we had a weather problem come into the spring wheat. And we also thought actually winter wheat as well. And we had the spec traders come in, the spec funds came in and were buyers and carried us up into very high price levels until we couldn't sustain it anymore. And then once it rolled over, those funds have all been sellers now. And so we're still fighting that fund selling. In addition to having gone through harvest and had farmers sell quite a bit of wheat.
Now, that spring wheat concern is what drove us higher. Now the combines are rolling on what little spring wheat is harvestable up there. Have you heard anything about yields? Is there anything that could spark this market to move back to the upside?
Well, Minneapolis wheat stabilized this week and actually bounced upward a little bit. And so there's quite a bit of talk about just how many acres are we going to harvest and how many are going to be baled. And the USDA left that number, harvested number, most people think too big in their August report. And so we expect that the acreage number harvested acreage will come down, and that the yields are just highly variable.
Okay.
And we're still in the early stages. It's hard to get a handle on what the national yield might be.
Where we sit in the wheat market now, is this a buying point for producers, or do we still have to wait a little bit longer if folks want to re-own any of those harvest sales?
Now, if you want to re-own, now's the time to do it. We're all, as you said, all the way back down to the bottom. We already have the spec traders having liquidated their long positions and gone short to heavily short in the Chicago wheat. So no, if you're going to be a buyer of wheat, in fact, if you're going to be a buyer of any feed, this is a real good buying opportunity that you're getting. Don't miss it. We may not go up necessarily from here, but we're making bottoms, and we'll have higher prices as we move through this season than what we have today, I believe.
Well, now that is probably good news to a lot of folks, both wheat and corn growers, our feed grain producers. We saw the USDA come out with a report last week that you talked about left harvested acres too big on spring wheat. A lot of corn growers believe they left the yield a little too high on the corn side. Where is this market going to find a low, John, on corn?
Well, the reason the prices are falling is primarily speculative selling. We really don't have very many farmers selling, other than people are cleaning up the ends of the clean the bins out and so forth. And we still have one other event to go through, and that's when all this delayed pricing corn gets flushed through the system. Remember last year, August 31, when we were at the Farm Progress Show, was when we posted the low on corn, and it was the day that we flushed through all of the corn that had been left on the price later contracts that never got high enough for people to price. And so I think we're still dealing with that speculative issue, and so there's still more room to go lower, I'm afraid to tell you. We started with the funds short across all the crops, 460-some thousand contracts. It went all the way up to the point where they were long 300,000, and now they're long 46,000. So they're still net long the market, sold out over 100,000 contracts the week ended Tuesday, according to CFTC. So there's still more speculative liquidation to come, and there's still another round of the farmer movement, I'm afraid, to come. So we may actually notch a little bit lower, but I believe it's buying opportunity for anybody who's wanting to accumulate feed or re-own grain that they've sold.
Now, we do have a question from one of our followers on Facebook. This is from Dave, and you talk about seeing higher prices potentially once we get past this liquidation phase. Dave is wondering, can December corn rally back up over $4 if the other crop tours that are kicking off their touring season now get a lower yield number than the USDA? Would that be enough of a spark if these tours come in at 165, 163 national corn average yield?
Possible.
Okay.
The problem with the tours is that that's not the number people really pay attention to. The USDA needs to print a lower number. That's what it takes really to get markets to move usually.
Okay.
But first of all, we've got to get done with the selling. We have to exhaust the selling. And we do that with markets acting and looking as negative as you can possibly imagine and more on the horizon. If you remember the last time I was in here, we had prices at the high and we were looking at a very, very dry weather forecast that turned out to, suddenly there was rains that came and that was the end of the rally. And now we've got to swing it around the other way.
Soybeans, John Roach, we've seen same story play out in soybeans. Huge drop last week. That drop, was mitigated this week. Have we found an area of stabilization in here on November beans?
We've had pretty good sales, export sales, starting to pick up a little bit. So yes, I think we're down into real value. But lots of competition coming out of Brazil, and in the same situation with corn. A lot of competition coming from there. So we have to get through some of their inventory yet before we can see our prices start to improve.
Do you think farmers looking at November beans where they are here in that low $9, $9.40 range, are we going to see a lot of farmers selling off the combine, or do you think we'll see a lot of beans going to storage at that price level?
I think farmers will dig their heels in and sell very little. The prices don't offer profits unless you've got really fantastic yield somewhere. And so my guess is farmer selling is going to be very reluctant.
Okay. Now, let's take a look over at the livestock market. We've seen this pullback. Gosh, that's the word we're using a lot this week on the show. We've seen this pullback also in the livestock side. Live cattle front month down to 105. Based on your reading of demand, where do we sit here in the cattle cycle? Are we posting a low here for the month of August?
Perhaps, but I think we maybe have a little bit more lower to go. I mean, the dressed beef market fell this week again, and we have the relationship between choice cattle and select, which was out, as my memory is right, about $30 premium to the choice, is now less than $3. And so you have plenty of well-finished cattle, and our numbers are expected to stay at relatively high levels here as we move on through the next few months. And so it's hard for me to imagine that the market can get very excited here and do much of a recovery until we get a little further down the road. August is a tough month in the cattle business normally, and I think it's going to be again this year.
For producers who are buying feeder calves that are still, at least on the cash side, relatively highly valued, how should they be managing their risk given the doldrums we're in on the live cattle side? Do you just bet on the come and put them in, or do you put a put strategy in place, John? What do you think?
Well, if it would seem to me that some sort of a put strategy underneath of the feeder cattle you buy makes sense. I mean, there's just not enough profitability out there in livestock or in the agricultural business not to be carrying some insurance on high-risk positions, and buying feeder cattle are always a high-risk position. And so I think we're in the environment that you need to be keeping some insurance underneath any of the cattle that you're buying. And I think you have to be cautious out here. This is a cautious environment to be living in, I think.
Yeah, I think you'd say that. I imagine a lot of bankers would suggest the exact same thing. It's time to be cautious. We talked about feeder cattle. They are still relatively elevated. We're seeing the front month feeders at around $140 a hundredweight. Do you expect that to pull back a little bit as we lose some profitability in the cattle finishing side of the ledger?
Yes, and if we get a bounce back in the corn market, that'll help pull the feeder cattle down as well. And then look at your pasture conditions. The pasture conditions, we've got about a fourth of the country really in drouthy kind of conditions with pasture issues. So the way I look at the feeder cattle market, I think it could come under some further pressure.
All right. Now, as you look, you mentioned the drouthy conditions. Does that give you anything as you look out into 2018 that producers should be doing should the drought spread? Is there any insurance policies we should be putting on either in grains or in livestock, given the expanding drought that we're looking at this fall?
Well, that kind of an insurance policy would be buying. Okay, so once again, go back to the situation on your particular farm. If you're used to buying back sold inventory, you may want to buy back the inventory that you're selling that's going to be delivered out of the field this year or in the early part of the crop year. But most people aren't. Most people sell the crop and then they're done. And so it would seem to me that you just have to wait for market recovery and you have to market into it. and I think that we'll have better opportunities. So what I'm saying to people is don't do anything you don't have to do right now. Just delay. If you don't have to do something, just wait a little bit. Wait a little bit.
No need to reward the market at these prices anyway.
It's not much of a reward.
Exactly.
It's usually the truck goes out taking along part of your checkbook. So no, it's better off to just wait until you need to do something, and then you can make a decision. Hopefully we'll know more then. Right now we don't know the size of these crops, and we'll know a lot more 30 days from now.
Now, before we let you go, John, we did have some news. The U.S. did sign an agreement to ship pork to Argentina. We're going to be selling them fresh and frozen pork. The pork market down $2.50 on the week. Is there enough momentum to get this pork market turned around? See lean hogs turn back to the upside?
I think the hog market's a little too cheap right here. I mean, if you look at the numbers, we're really supposed to start to reduce the numbers a little bit. And we have, if you look through the year, we've run bigger production numbers, and we've had bigger export numbers. So the market, if we can just reduce the supplies a little, which is what we're supposed to, the market should bounce back a little. So I think I'd give it a little time. I'm a little more worried about the cattle than I am on the hogs.
All right, and so even hogs, this would be a place to acquire some long positions if you're going to be making some marketings a little bit later in this year. Is that what I'm hearing?
I wouldn't do that. I'd just be waiting to put short positions on.
Okay. All right. Well, John Roach, we always appreciate you coming on. We've got just a few seconds left. The U.S. dollar continue to strengthen or continue to weaken or start to strengthen?
Oh, the politics are really dictating that. And at the moment, the politics are really dictating downward kind of pressure because it doesn't look like we can get anything accomplished. I think that will change. Okay. And I think we'll start to see some movement out of Washington that will give the dollar some bounce.
All right. Well, John Roach, thank you so much for taking the time to join us.
Thank you very much.
That wraps up the broadcast portion of Market to Market. However, John and I will keep the conversation going, including answering more of your questions during Market Plus, available in podcast and video form on our website. While you're there, check out the link to our Flipboard magazine, Market to Market reading material. Each day, the producers update the collection of news they are reading and put it in one convenient location. Join us again next week when we look at how farmers are squaring off against state officials over hay in roadside ditches. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.